So INDAS is essentially India's new set of financial reporting standards, which are converged with the International Financial Reporting Standards, or IFRS as they're called as. So globally, there are about 100 plus countries that currently use IFRSs that evolved as probably the most widely used set of standards, and therefore the one set of global accounting standards. So India is making an effort to kind of converge with that, because we want to be part of that global club. From the role that India plays in the global economy, the role that Indian companies now play in the global market, considering the role that global investors play in the Indian markets, and so on and so forth. So therefore it was inevitable that we had to make this switch, and the reason we are doing this is because the current Indian GAAP, or the current Indian accounting standards that exist are fairly outdated, and they have not been changed for the last 15 years or so. So we haven't kept kind of pace with the business developments globally. So for instance, there are gaps on a number of areas. So areas around financial instruments which cover everything from the various types of instruments you use for your funding purposes, to the various other assets and liabilities that will get settled with cash over a period of time, and the obligations relating to all of that. There's absolutely no guidance on any of that today in Indian GAAP, or very, very little guidance, and therefore significant diversity in practice. So that's one big area that gets filled up with the introduction of INDAS. The other one is on the accounting or treatment of mergers and acquisitions. Again, that's something very prevalent in today's business scenario. The M&A activity, we read about it every day in the papers, but if you look at the guidance on that, again from an Indian reporting perspective, there's very little guidance, and a lot of that guidance which exists today, either through the consolidation standard or a little bit on the standard amalgamations, etc., results in an accounting treatment which is not always reflective of the current business realities. So that's another area which gets filled up. If you look at our standard on revenue recognition, it's currently a fairly outdated standard. We're kind of leapfrogging from that into the latest standard globally, which is the new IFRS 15 equivalent standard, which kind of looks at all types of arrangements with customers and uses a single model towards recognition of revenue. That's another area. And if you look at the whole consolidation standard, so today our consolidation in India is based on the legal form or legal structure of arrangements. Largely, you could potentially end up with two people consolidating the same business because of the way the standards are structured. But the new standard, again on in consolidation and IFRS, looks at the substance of how businesses are controlled today. Again, looking at the current business realities, the type of arrangements through which businesses are controlled, etc., and uses that crux of that arrangement to determine who consolidates and who doesn't consolidate. So with all of this coming in, I think the quality of financial reporting in India will go up several notches. Will become much more. There will be a lot more transparency. There will be a lot more of disclosures. Disclosure is the other thing that's coming in today. There is very little disclosure that's meaningful from an investor's perspective that accompanies a set of financial statements. Whereas under the new set of standards, there will be a lot more of disclosures that come in, a lot of quantitative data that comes in, a lot of qualitative information that comes in, a lot of sensitivity analysis that forms part of your footnotes to the financial statements, etc. So a lot more of meaningful information becoming available to an intelligent reader. So in that sense, I think it's going to be a big change for India. We're moving into these set of standards, and I'm sure Indian companies will start seeing the benefits of that in the years to come, with things like, I think, lowering cost of capital, I think attracting better valuations, and of course being able to raise capital in a more cost-effective manner, being able to kind of raise capital in global markets, and so on and so forth. So
what is the timeline for implementation? It's already
yeah, so the timeline, yeah, it's practically on, in the sense that, so there are two timelines applicable here. One is a voluntary adoption, which is permitted, which is from the current financial year, which is financial year 15-16, but for that, companies will also need to present the comparative information for the year 14-15, which is the last year, which has already gone by. So that is one option that's available to companies, but otherwise there's a mandatory timeline, which is again in 2 phases. So the first phase covers all entities with a net worth more than 500 crores and the other entities within that group, so including their parent, subsidiary, joint venture, associates, all of them. So all those entities which will have to move into INDAS standard from the 1st of April 16 onwards, or 16-17 financial year, but they will need to present comparatives for the previous year under INDAS standards, which effectively means 1st of April 2015 is the date when they need to prepare that opening balance sheet under INDAS standards, and 15-16 needs to be then prepared under the INDAS standards. So therefore, yeah, we are very much within the first kind of timeline or within which companies need to be using these standards.